grew a business that got bought by BlackRock for over 23 billion Australian dollars. And he says something, he says, every day I remind myself two things: when I had no money and when my business was almost dying and I had to really work hard to make it work.
Really keen on importing good people, right? Good people or great people and great ideas. To be honest, I couldn't care where they actually come from. What we're doing is you're pooling credit, and then you're lending that money out, which is fantastic. And as a result of lending that money out, you're providing well needed liquidity to businesses that really actually need that to actually survive.
Yes.
Okay, and actually grow their business.
Absolutely.
So your clients are not buying a share in the actual business. What they are given instead is a loan note or some type of bond, okay, which then I guess is vested over a certain period of time or at some type of maturity date. Is that correct?
Yeah, so we mostly contract 12 months or less.
Okay.
Because on the flip side, I've got to manage my liability to my unit holders or the investors in our fund.
Okay.
And our commitment to them in our prospectus is that they will be entitled to redeem their investment in our fund after 6 months.
Okay.
And so on my asset side, which is where I'm investing and lending out to businesses, I want to be able to get my money back within 12 months. Some deals I do even less, 30 days, 60 days even. Yeah. And some I do up to 12 months. And I balance that overall portfolio composition.
Okay.
And that's because our goal is not... So our goal is essentially to provide a very liquid and regular paying investment solution to our investor clients. And then in terms of our investee clients that we're investing into, we are not solving their long-term funding needs, we're solving their short-term funding needs. So an example would be, we invested into that company in Melbourne that installs...
Would it be correct to say, sorry Tanway, it's not that you invested into, you lent?
Yes, lent. I mean, I talk about debt investment versus equity investment. I mean, you're right. To clarify, we are not taking ownership in the business.
Yeah.
The founders or the owners or the shareholders, they retain ownership of the business. We are merely providing some capital that they take onto their balance sheet, which they can use paying their staff, investing in marketing, product development.
So just for the sake of the audience, just to get the mechanism right, okay? The investor, so like I invested into Wholesome, okay? I'm actually investing into a debt instrument that Wholesome issues. Wholesome goes on...
No, just to clarify, it's not a debt instrument. So legally, they become a unit holder of a security, which is the units, in the legal entity called the Wholesome Responsible Fund. The Wholesome Responsible Fund is a separate legal entity from my company, which is Invest Wholesome. So we're the fund manager. The fund is legally different to us.
Okay, got it.
The fund is monitored and overseen by a trustee. Right? And the trustee has a fiduciary responsibility to take care of the unit holders or the investors.
Got it.
That relationship is equivalent to a ownership relationship. Right? So when someone invests into the fund, they are buying the units at the most recent monthly unit price. And in other words, your audience may know what's called a NAV or net asset value. Essentially, a security is priced on a regular interval. So that's not a debt relationship. When they exit, they sell their unit at the price at the most recent
So
price.
effectively what is happening, I'm buying a share in that, let's say, call it that unit trust. Or whatever that structure is.
Yeah, it is a unit trust,
All right, brilliant. It's a unit trust then. Okay. The trustees of that unit trust, fund manager.
No, there's two. I just don't want to. I'm going to get the terminology right here.
Do it.
The trustee and the fund manager are different. We're the fund manager, which is we market the security and we determine the investment strategy. The trustee is merely overall representing the interests of the unit holders. And making sure that we're following compliance.
But the trustees appoint the fund manager.
No, we appoint the trustee.
So you appoint...
Oh, well, we actually appoint each other. It's a very funny kind of relationship. We both come together.
Okay.
So I approach the trustee. Our trustee is a reputable company called Boutique Capital.
Okay.
They're in the business of providing trustee services to many fund managers.
Yep.
A fund manager approaches and says, okay, I would like to set up a fund. Will you be my trustee?
Yep.
The trustee says yes. So the trustee creates the vehicle, appoints us as the fund manager, and then starts issuing units every time someone joins the fund. And then also, when we want to invest, in other words, when we want to invest our unit holders' investments, we send an instruction to the trustee.
Yep.
We would like to invest here. The trustee says, does this meet national regulations?
Yep.
AML, KYC, so money laundering, all of that kind of checks.
Yep.
But then they also check that, is this investment that the fund manager has proposed compliant with the prospectus or the information memorandum? Because I can't turn around and say, I am going to invest into cryptocurrencies.
All right, but the fund manager isn't saying you should invest here. The fund manager is actually saying you should lend some of this capital over here.
Yes, yes.
Got it.
So all of our instruments are short term, and they're on a promissory structure such that we will be able to get the money back as per the duration of the agreement.
Okay. Is the underlying loan that you've made, okay, as a fund manager, in combination, I guess, with the trustee's permission, is that secured on any assets?
Yeah, great question. So I want to kind of clarify one thing, and I'll answer that question. Please. So first of all, whilst these are short-term debt structures, our structuring and our relationship with the investee business is not necessarily always sort of like a standard interest-bearing contract. In fact, due to our ethics requirements, we don't do interest-bearing contracts.
Okay.
We do have pricing that might be similar to interest in the sense that it's a fixed price.
Okay.
If we buy a product and sell it at a markup, then we make a margin out of that. But we also do what's called variable price contracts, and they can be on a profit and loss sharing structure.
Right,
so I want to give an example of that. We invest into agribusiness that procures Brazil nuts from Latin America.
Okay.
And they sell it to 60 markets around the world where they have distribution and retail operations. Yeah. Our investment was to help them fulfill a gap in their capital needs to facilitate trade finance. Why?
Got it. Yeah.
You harvest, say, in Q1, but you're selling throughout the year.
Correct.
You've got to go buy that product, get it ready, put onto ships, send it out. But you're not going to make your money until you've sold it, and that might be 3 to 9 months later. We participate in the purchase of the raw material, say for $5. It's sold for $10. We get a share of that margin. Okay. So it's a profit and loss sharing arrangement. But it's also short term because they're going to pay back the profit plus the principal
that they're likely to get
at the end of that cycle.
Yeah, got it.
And then if they go again, we can choose to revolve that or do a fresh new contract and refinance. So I wanted to clarify that not all of them are, and for your audience, it's not necessarily just interest-bearing contracts. There's many ways you can skin that cat. In terms of security, we will take security where we can. And it takes many different forms. In that example, the security is over the inventory, which is the agricultural product that has been harvested. Okay. Other times we will try and take security.
Has already been harvested that they've got already, or is that if it's due to be harvested?
It can be both.
Okay.
It can be both, because what we're saying is, look, company X, here's some money. You can use that money to procure and to prepare already harvested products for sale. But it has to be only that. And we also have set in this particular arrangement, and we didn't do all the contracting, we had a broker who worked with us. The funds can only be drawn down when they have a contract with a buyer who's going to take that product. That provides additional protection for us because we know that...
You've got a confirmed buyer.
Confirmed buyer. And that's de-risking for us, a certain element. Great. And then they do other things like they have insurance for trade and all that. So there's additional protections. In other businesses, we would take security over the assets of the business, whatever the assets might be, and we might sometimes take director guarantees because we want to protect against things like fraud or mismanagement and negligence. So as a fund, we have to uphold and protect our investor capital from our unit holders. And we need to ensure that the businesses we work with are doing the right thing, and that we're able to get something back if something goes wrong. So yes, as much as we can, we will try and take security.
What's your views on wealth inequality, Tanvir, versus giving people the opportunity or fair opportunity to create wealth or become ambassadors of their own success?
Yeah, absolutely. I mean, there's a quote I think from Adam Smith which says that wealth begets wealth, but it's like it's hard to get wealth in the first place, right?
Yeah.
So the essential idea is inequality can be further exacerbated when we don't have sufficient means to enable capital to go to people who are talented, have an entrepreneurial drive, and have the hard-working ethic to be able to grow and create opportunities for themselves. And hence why we are so passionate about small and medium businesses, because that is, if we think about the most successful stories, there's one entrepreneur that I really admire in Australia. His name's Robin Kutter.
Yeah.
He came literally from very little as a student from Bangladesh, teenager, studied, and now he grew a business that got bought by BlackRock for over 23 billion Australian dollars. And he says something, he says, every day I remind myself two things: when I had no money and when my business was almost dying and I had to really work hard to make it work. He's in the business of providing servers for very large tech companies. His company is called AirTrunk. So wealth inequality is a real problem, and capitalism can further exacerbate that or it can solve it. And I think we want capitalism and the system that we're in to solve it by directing capital to the segments that are underserved. And society is much richer for it. We get more amazing entrepreneurship, innovation. We have more customers. And through employment that's created, we get increase the purchasing power for an economy. An economy that only has 1% owning majority of it makes us all poorer, and it creates more risks.
I think I'm like really keen on supporting good people, right? Good people or great people with great ideas. To be honest, I couldn't care where they actually come from.
Exactly.
What it's more about is, look, are you trustworthy? Do you have integrity? Are you willing to work as many hours a week that it actually takes to get this idea, which is a kernel in your mind right now, into fruition with all the blood, sweat and tears it actually takes? Because 99.9% of the people, they have great ideas, but they lack the discipline, they lack sustainable motivation to actually make it all work. People, I think they have a romanticized idea about entrepreneurship. Entrepreneurship is probably the most difficult thing you will ever do.
Yes. And
moving out of your, let's say, your 9 to 5 or your 10 to 7 type of job in the city, although may sound quite lucrative, right? I think for the person who doesn't have the right type of attitude, okay, it will become a nightmare, because you are going to be working 7 days a week. Sorry, you're going to be working 8 days a week, right? And you're going to be working 25 to 30 hours a day.
You can't switch off. There's no...
You can't switch off. Can't switch off, man. I was working the other day till like 4:30 in the morning, and then I was up again like 9:15.
Wow.
Okay, I know what it takes, but you have to love what you're doing, right? But if you find that right person, and that person has that right idea, and he's got the drive to actually, he or she has got the drive to actually take it through and have a great impact on their local community, the greater society, and it could be in so many different areas. I think the Sustainable Development Goals of the UN are very ambitious and incredibly noble. But even if you were to look at closer to home, I mean, what does your community actually need? What does your audience actually need?
Yeah.
All right. And see whether you can meet those particular objectives. And this is where I come into and I say, what can you do to encourage or make people ambassadors of their own success? Because once they become ambassadors of their own success, I think there's a story behind that.
Yeah.
Okay, and that story is incredibly motivational. And I think we also have nowhere near enough positive role models.
Yes, yes.
Which can encourage a dignity.
Because it shows it's possible.
Not just shows it's possible, but our competition, okay, your competition isn't another sustainable fund. Mm-hmm. Your competition isn't even me, okay, who advises on a whole host of global stock opportunities and bond opportunities and so forth. Because I touch on the Sharia compliance space because most of my clients are not from an Islamic background or a Muslim background, okay? Whereas the Wholesome Fund, your modus operandi is around the Sharia compliant proposition.
I mean, okay? We're broader than that. We serve clients from all sorts of backgrounds.
This is what I'm about to. I'm leading on to that. Okay. Now, one of the reasons why I really like your brand and your mission, okay, is because you speak to everybody. Okay. Your goals are noble, regardless of which audience you're actually speaking to. Okay. Having said that, the point that I was about to make was in terms of our competition. Our competition is actually TikTok. Our competition is Instagram. Our competition is Facebook. Okay, because it's these characters who do incredibly what would I say? Incredibly entertaining type of shorts that leads you to doom scrolling, right?
Yeah.
So these are the new ambassadors for our children.
Yes.
And what a sad world that is. Okay?
Yeah.
And a sad world when it's a message where it can undermine people's dignity quite a bit. Whereas we need more Dr. Tanveers, okay? All right, sorry, Tanveers and others who are in this space, okay? And I think there are, but not enough. Nowhere not enough. Nowhere near enough.
I mean, look, the opportunities in the world, the needs are so massive. We want to, and you know, in a lot of the conversations that I have, is I try to encourage my entrepreneurs to come and solve these problems. Because the market's big. It's not just about us doing everything or just you doing everything. Yeah. I think that, you know, finance is increasing. Is finance as a share of global GDP, finance as a share of global financial trade flows. It is now a financial intermediation has become so much more significant in the last couple of decades than it's ever been in history. Yeah. So we can't just be passive and take it for granted. Either, and I said earlier, it's not value neutral. Either it's going to move in the right direction, it's going to move in the negative direction. So we do need to get more entrepreneurs and founders and the community talking about it. And financial literacy is really important. And financially, I mean, I think, look, there are some great finance influencers or finfluencers who share some great content in trying to educate the masses. Yeah. But also, I think some people are also oversimplifying things into things like, oh, just buy this ETF or just buy this cryptocurrency. And I think that snackable type of advice can only take you so far. Yeah. And more nuanced understanding is necessary. And you know, things like, okay, what's my diversification in my strategy? How do I build for illiquidity that might arise in situations? How do I properly save for a house, or if I want to finance a new business? So there's all these other forms of knowledge that's necessary. That you know, just a short sort of clip might not be enough to answer.
Cool. The last thing we'll end on. All right. What would your, let's say, 3 tips be for a budding entrepreneur?
Yeah. Wow. So the first thing I'd say is, before you quit your job and start on your day one, you've got an idea and you want to go out there, hash out a website and, get a logo and all that. Before you do any of that, spend at least half an hour with 10 customers, potential customers if you're just starting out, and really work out what is their problem and the thing that you're trying to solve, does it really convincingly solve it for them such that they would want to pay for it? Not just say, yeah, I'll try it, but actually willing to pay for it and commit to it.
Yeah.
If you do not do that work, then all your effort will go down the drain, unfortunately, because you're not building or solving something that people actually need. If you don't have customers, you have no business.
Cool.
Doesn't matter how great your idea is, no matter how good your product is. That's one. Number two is, as you mentioned, entrepreneurship is not easy. It's going to take time for you to maybe even get to a break-even position. And you, as a business owner, you want to make sure that your suppliers and your staff are paid before you even take care of yourself.
Yep.
Because without them, you've got nothing. So sustainability is going to be key for yourself. And that might mean, do you have a savings buffer? Do you have other lines of financing? Do you have a spouse who's going to be continuing to work? Yeah. Whatever it is, you got to figure it out, because you might think it's going to be the next big thing within a month, but it might take 2 or 3 years. The third thing is,
it could take 10 years.
It could take 10 years, absolutely. I'm being optimistic there. But most businesses, I think 80% fail in 3 years. So I'm kind of going off that kind of metric. Yeah. The third thing is, beyond success of business, beyond the numbers, the financing, how much profit you're making, if you don't have a great support network, no matter how successful you are or not, you can only go so far. And that means, and I heard this amazing piece of advice, not from an entrepreneur per se, but someone I came across, Vicky Shreedle, who's the outgoing, and now she's, I think, moved on from as the UK High Commissioner to Australia. Yeah. And she said, in all the amazing things you want to do in your successful careers, if you don't invest at least equally in the people that matter to you, as much as you're investing in your business, your learning, your career, your mentorship, networking, whatever it might be, you're not going to be able to last. Yeah. Because without them, you don't have those social relationships, and we are humans, and social relationships are really key. But also, when things are tough, who do you turn to for support? And if you take them for granted, your spouse, your parents, your siblings, your kids, your friends, whoever they might be, you've got nothing, and it can be extremely lonely at that point. Yeah. So I talk a lot about, and I really advocate for that sort of holistic well-being, the mental health, and it comes from relationships, and also money matters, as I mentioned in point number 2. Yeah. So those are 3 things I would say are very key and not to be taken for granted. Cool.
Thank you very much, Tan Wei.
My pleasure.
Brilliant.
Great speaking to you.
Likewise. That's it, everyone. Thank you very much for joining us. Tune in for next time.